Welcome to Markets Now. I'm Michelle Rook with Ken Beadle with Paradigm Futures. Well, grains, we have seen some two-sided trade in soybeans. Currently, we're just a little bit stronger, but corn and wheat setting back. And over in the livestock complex, cattle have had a pretty nice up day, but we've been mixed in the hogs. All right, Kent, let's start off with the wheat market. Lower here today, but there was rumors on Friday that maybe we were going to get some China business. No confirmation today. So is that why we're drifting, or what else is going on?
Well, there's a lot of reasons that we're drifting today. I think that the marketplace was expecting actually some hard red winter last week might get sold, and that didn't materialize. There were the rumors of additional Chinese soft red business that did not show up on today's daily reporting. So the market was a little disappointed by that. Keep in mind, we've had a decent rally in wheat, and we've actually liquidated or had short covering of probably 30% of the short position that the funds were carrying. So they're a lot less short and maybe a little less uncomfortable than they were when the market rallied after that Chinese business. So maybe a little less emphasis in getting more of those shorts covered. And also, we had some rainfall in the Southern Plains here over the weekend, and I think that has a little bit to do with it as well.
All right, so wheat is dragging down corn or not?
Yeah, I feel that way. Most of the fundamental shifts in corn here recently have been a little bit more positive. Average U.S. basis levels have jumped about a dime since the market rolled from the Dece to the March. We've had, fairly decent export numbers. We had a good export inspections number here again this morning at over 900,000 tons. We actually added some margin into both ethanol and into livestock production last week with higher cattle prices, lower corn, higher hog prices and lower corn. Just generally, it feels to me like we're turning the corner on the corn fundamentals, but the technicals are still tough. But we've got resistance above the corn market at the 50-day moving average, which is capped every rally, and that's not that far away at 491. And that technically that market's been sideways to lower for quite some time, and so. You get a rally like, even a little short covering we had on Friday, you come in on a Monday morning and it just seems like traders want to sell the corn market.
Yeah, traders, and at times we get up into areas where farmers probably do a little bit of selling as well. Now, some of Friday's rally was also, again, some of these China rumors. We've been hearing them in the market the last several weeks. We've had a little bit of business that's come in on the weekly reports. But what's your sense about what China needs for corn, because their corn imports for November were actually record large?
Yeah, and that goes back to the old adage, don't listen to what they say, watch what they do. Okay, so they're talking about actually producing a record corn crop. If we remember, they had flooding issues in major areas of their production territories. They also had in other areas, a few, droughty issues. It didn't feel to us like it was going to be anything close to a record, and yet they said it was a record. Okay. Their prices, however, are still maintaining about a $4 premium to U.S. corn futures prices. And as you mentioned, they've had record imports. If you watch prices and you watch what they do, it looks to me like they need to buy corn. And as you mentioned, they did show up last week on the sales report with well over 100,000 tons. It just didn't show up on the daily report. I think they're going to be a buyer of corn from the U.S. here in the future.
Are they buying for the reserves? And we're priced below Brazil, so they should be coming pretty soon, as you say.
Yeah, we are priced below Brazil. Brazil has had a fairly sizable rally as people get concerned about what the size of their safrinha crop is going to be. And, obviously, exports out of Ukraine are certainly more difficult, not impossible, but more difficult. So I think it may take some time, but I do think that we're going to get additional Chinese exports show up on the books here over time.
As we speak, soybeans are to the plus side as well as the products. We had a little back and forth action here early this morning, but near-term forecasts still look like we're probably doing some damage to this crop. So we still have some weather premium in there.
We have some weather premium. Of course, I think we're dealing mostly with what's just happened over the past week. Temperatures well over 100 degrees, fairly dry week in Brazil. Maybe the second real major bout of heat and dryness that this crop has had to deal with. Of course, they got off to a late start too. The forecasts are much more generous with rainfall starting tomorrow, frankly, and then Wednesday and on through the next 10 days. But that's the European model, which has been kind of over-promising rainfall in its forecast. The GFS is actually quite a bit drier, and traders are still wondering, which one of these is going to win out. Given the problems that we've had with heat and dryness, I think the best you can say about the forecast is that if it happens to come to pass, it probably maximizes whatever yield potential is left in this crop. It's a big question as to how much yield potential that really is.
Yeah, so the market's just going to hold premium or at least move kind of sideways until we get confirmation one way or the other then?
There is that. Keep in mind, too, just, overall basis levels out of Brazil have actually been rallying. And, of course, prior to their next harvest, that's not exactly unusual, but I think we're up about 80 cents in 3 weeks. U.S. seems to be getting all the spot business right now. That certainly is helpful. The other thing today, and you mentioned the products, and both soybean oil, soybean meal starting to rally. Last week, both of those commodities have fallen down to areas that I think represented some pretty good support. And, end users in the form of, the renewable diesel producers and or, your hog and poultry businesses are, looking at those cheaper meal prices pretty favorably.
Yeah, we got March meal under $400. So to your point, certainly a bit of a value. We're back above that right now. Cattle market, another update here. We had a higher weekly close last week in both live and feeder cattle futures. Do you think we can continue to build on that?
I do. Ultimately, the people in this cattle business that I respect continue to tell me that we are going to have less cattle in the United States in 2024 than we had in 2023. We were absolutely due for a major correction given where we peaked out and the size of the speculative position that was in that marketplace. That speculative position got liquidated out. It started going down fairly orderly, but 2 weeks ago, when all the rumors about issues in the LRP situation started hitting the news wires, it felt like forced liquidation, margin clerk liquidation, and oftentimes you make major lows when that happens.
Absolutely. The cash market's been down 6 weeks in a row here, but we did notice towards the end of the week last week that we started to see a little bit higher prices versus what we had early in the week. Do you think there's a possibility we could see some at least steady cash this week? Is that also being factored into the market today?
Yeah, if I was to call cash this week, I'd call it steady to higher. I like the fact that we traded 168 early in the week and that we went home on Friday trading it at 170. I think that's probably all the work that needs to be done to the downside, and I'm looking for things to start to work in the other direction here again.
All right, some good news there. What about hogs? The futures February now at a premium to the index, but we can't get the index to catch. So are we going to continue to see the front end of the board under pressure?
Well, we're seeing that again today, down about 50 cents. And, at some point in time, we're going to see the cash markets find some good support. It's likely going to be led by the cutout. 2 weeks ago, the cutout finished the week higher. Last week, it was down, but not nearly as much as the cash. Hogs were down Margins are getting a little bit better at the packer level, and eventually that's going to provide some demand into the hogs and allow us to bottom this cash. And it's at that point we're going to start seeing the futures start to move higher.
All right, let's hope so. Thanks so much for joining us, Kent Beadle, Paradigm Futures. That's Markets Now.